All right, everyone, it's the top of the hour. We'll get started here. My name is Eric Rodall. I'm our Business and Political Engagement Manager here at People for Bikes, and thank you for joining us for our third COVID-19 response webinar. During this webinar, we'll be giving some guidance with some help from the Small Business Administration on those loans that they are helping to administer. We want to, as always, take a brief moment to thank our members for supporting our work in Washington, D.C. and at the state and local level. Your support means more now than it ever has, and we will continue to do this great work with your help from the industry. Moving on here, we'll run through this quick agenda. We only have two main points on the agenda today, so we can kind of dive into the weeds on what's happening with these different loans and the Paycheck Protection Program with our two specialists from the SBA. And I also have our Federal Affairs Manager, Noah Banian, joining us this morning. So with that, I will throw things over to Burl, Kelton, and Steve White from the Small Business Administration. Burl is a public affairs specialist at the U.S. Small Business Administration and is based in Sacramento, California, handling issues in the West, all to the west of the Mississippi. And Steve White is based here in Colorado, here with us and in Denver, and he will explain a little bit more about the Paycheck Protection Program. And with that, I will hand things over to Burl.
All right, good morning, everyone. Thank you for the opportunity for us to be able to share information about the currently moving target, really, that is this disaster recovery program. The disaster recovery program from SBA has been around for over 50 years. We've been dealing with disasters ever since. And in this particular case, COVID kind of makes a special case because we are seeing disaster by state. And in the West, it's already 23 states and 3 territories, which are our service areas. The SBA Disaster Assistance Program is separate from the regular SBA program because all of our loans are direct loans from the U.S. Treasury. So we underwrite, fund, and service the loans that are made completely within the agency. This is not a joint bank SBA program, but it's completely within the agency, and all of the funds come from and through directly through the agency to the borrower. There are 2 different disaster programs in this particular event, and they are separate from the Paycheck Protection Program. The first one is the Emergency Advance Economic Injury loan, which can be converted to a grant, and that is based on the number of employees in a business and limited in the amount and scope. The maximum amount is $10,000, depending on the number of employees, and that can be applied to or for, I guess you should say, at the same portal as the long-term EILD loan program, which is the second part of our response. And that long-term program is a $2 million maximum program, depending on actual economic injury and for operating expenses only. So we're not dealing with profit or stock distributions or anything like that, but it's strictly payroll and operating expenses related to ongoing operation. The interest rate is 3.75%, simple annual for business, 2.75 for nonprofit, private nonprofit organizations, which within hours almost now includes local religious church organizations, as well as their secular operations, independent contractors, and of course regular small business out there. So those can be included as part of that long-term direct loan for economic injury, dealing with operating expenses. One of the benefits of the long-term EIDL program is that we service the loans from beginning to end. So we will take opportunity to adjust the terms and amounts of the loan for the business owner if their situation changes. Right now, we're looking at expenses out about 6 months or 500,000 max. However, we just found out that the current max for initial disbursement is $15,000 or 2 months worth of operating expense. And the reason for that is that we're trying to touch as many businesses as possible with the current funding situation from Congress. As that progresses, of course, we're looking to Congress to see what to go from there, but it does not limit the amount of the eventual loan and the amount that a business should apply for. So just to let you know that that initial disbursement does have a limit, and not to be shy about the full $2 million max remains in place, 30-year payment term, interest rate, and all of that remains in place. We're continuing to get guidance based on what Congress does with the law, and although changes do come, we're still going to be working on those as we have the last 50 years, making opportunities for businesses to recover. One thing, just briefly, and then I'll give you the website to go to make application if you haven't already done that. But the PPP program, the Emergency Advance EIDL program, and the long-term EIDL program can all be applied to at the same time. So we can be working together in tandem with regular SBA and your business as we go forward. The money that's received from the advance or the PPP or the EIDL cannot be duplicated. So if you have money that's received in the advance that you use for personnel expenses, and you also apply for the PPP that includes personnel expenses, then we wouldn't see the money duplicated from both. It would be one or the other. And a business owner needs to consider what best suits their business operation to decide how they want to approach that. And then money received from the PPP and the EIDL advance cannot be duplicated in the long-term EIDL for the same expense. So there may be personnel costs expense from one or the other of the advance or the PPP, but when we go to calculate the loan for the advance or the long-term EIDL, then we're not going to include what you've already received. And it's pretty simple. Taxpayers do not like to see us giving duplicates of funding where the need is the same. So we'll work one-on-one, case by case, with businesses that apply for the long-term EIDL program. And as I said before, we service from beginning to end. So if your loan goes for 30 years, we're going to be continuing to work with you as your need changes or if terms need to be adjusted, and we will help work with you on that. The application website, you want to take note of that, is COVID-19, the number, COVID-19 relief, and that's one word, .sba.gov /# So COVID-19 relief.sba.gov /# You apply there for both the emergency advance and the long-term EIDL, and we'll respond to you from there. Turnaround time, don't know exactly. It depends a lot on the complexity of the business that's applying. We have already seen turnaround funds dispersed, and I'm sure Steve will talk more about how the PPP is working. So I think that for now, pretty well wraps up a nutshell of what the EILD disaster side is. And again, the disaster side is completely separate from the regular SBA side. And we work in tandem, but we are separate. So there are different kinds of details in terms of the way that the program works. And we'd be glad to work with you if you have specific questions. I can take questions from email or telephone. If that's something, if you'd rather not discuss that publicly, and we work with folks all the time. So I'll turn it over to Steve White at this point, and we'll see if we can help you in the future.
Thanks so much, Burl. Thanks everyone for the opportunity to address a couple of topics with you today. I want to talk about the Paycheck Protection Program, and I also want to talk just briefly here, real quick, up front, about the Small Business Debt Relief Program. So the Small Business Debt Relief Program is for anyone who is a current SBA loan holder. If you have an SBA 7A loan, an SBA Community Advantage loan, an SBA microloan, or an SBA 504 loan. What SBA has done is it has suspended your payment requirements for the next 6 months. And on your behalf, SBA is actually going to make that payment. This program is retroactive to March 27th of 2020. So if you made your end of month March payment and you have an SBA loan, your lender will be reaching out to you and providing you the option of either returning that loan payment back to you or adding that loan payment to the amount or tacking it on to the end. You'll have the option to distribute that at your choice. And just to let you know, if you're a current SBA loan program holder, the SBA is going to be making 6 months worth of payments on your behalf. Questions about that, please forward those directly to me. Easy email, stephen.white@sba.gov. Stephen with a V, white like the color, stephen.white@sba.gov. Now I want to move into the Paycheck Protection Program, or the Triple P program. On March 30th, the SBA and the U.S. Treasury jointly announced the establishment of a new program authorized under the CARES Act called their Paycheck Protection Program. The PPP is an SBA guaranteed loan, 100% guaranteed. In fact, it's designed to provide direct incentive for small businesses to keep employees on the payroll. So at its essence, this is an employee retention program. This program is intended for small businesses, less than 500 employees. It includes sole proprietorships, LLCs, S-corps, fully born corporations. Structure doesn't matter. It also applies for private 501c3 nonprofit organizations. So again, private 501c3 nonprofits. Also applies to 501c19 veterans and to certain tribal organizations as well. Otherwise, businesses just have to meet the typical or small size standard for SBA in order to apply. Now, part of this Paycheck Protection Program will be forgiven if all the employees are kept on the payroll for the 8-week period following loan origination. So if you're able to keep your employees on payroll for the 8 weeks after the loan origination, then the SBA is going to seek to forgive that amount. The payroll amount got to be used 75% of that amount directly for payroll. 25% will be allowed for usage for commercial lease rent, mortgage interest, or utilities. But basically, SBA is trying to help small businesses keep their employees on the payroll. Now, if you're able to successfully apply for this Paycheck Protection Program, loan payments will be deferred for 6 months. No collateral or personal guarantees are required. There will be no fees charged for this program. So you're not out anything except for a small amount of time and effort. If you apply and you're not successful, there will be no application fees, no service fees, no fees outside the actual application for the borrower. Interest rate on this is 1%, and the maturity will be for 2 years. Now, how do you go about applying for the Paycheck Protection Program? Go to your local lender. Local lenders who are federally regulated by FDIC, regulated by the national or NCUA if you're a credit union borrower. Farm credit system institutions can also make these. So basically, every form or source of federally regulated lenders will be available to make these Paycheck Protection Program amounts. Now, having said that, the amounts we're looking to cover are bottom line payroll costs. So you're looking at wages, compensation, salaries, insurance costs, cost of employee vacation or / benefit programs, HR regulation requirement costs. Basically, anything associated with maintaining your payroll is going to be covered in this. A couple of different ways to look at calculating that. Borrowers can use either the 12 months preceding the origination, or they can look at the fiscal year of 2019 and use that, and they can annualize that by month, or they can use an 8-week period prior to the loan origination. We would encourage you to use the amount that is favorable to your application, because we get it. We realize small businesses are designed differently. Many of you have a combination of full-time employees with part-timers that rotate in and out. You have seasonal ups and downs in your payroll amounts, and sometimes you have 1099s that filter in there and out as well. 1099 costs will not be allowed. Anyone who's operating on a 1099 needs to file for their own PPP program, and they are free to do so. So basically, in a nutshell, that's the way that program works. It's going to max out at 10 million. What we're seeing so far is that most people are far below that amount. But I would encourage you to apply for it. Calculate the average that you can to maintain your payroll. And again, the idea behind this program is to keep your employees, or to retain them through the COVID-19 situation.
Great. Thank you very much, Stephen, for that information. And thank you, Burl, for covering those emergency disaster loans. With that, we will move over to a small announcement from our Federal Affairs Manager, Noah.
Hi, all, and thanks for joining us today. Thanks to Stephen, Burl. I just wanted to take 2 quick seconds before we move it over to questions, which I know there are already a bunch coming through. So just a heads up, we'll be sending around a document. You can sort of see the header here from our partners in federal advocacy and consultants, Signal Group. They produced a really comprehensive, really fantastic resource here that is we'll share with you all soon, just to sort of how do these loan programs exist in the political space? What are we looking at in the future? And how does this affect you? Because ultimately that's what matters most right now. Speaking of looking ahead, I just wanted to say a little bit about what we anticipate out of Congress. They're certainly not done when it comes to drafting and passing stimulus packages and legislation to support small businesses, to continue to provide emergency resources for the healthcare industry, and looking ahead, even starting to attack infrastructure as we start to rebuild. What we're hearing and what it seems like, there seems to be bipartisan agreement in the Senate, and potentially a vote as soon as this week, by the end of this week, for added relief funding, maybe $250 billion in new stimulus to go towards the Paycheck Protection Program because of how popular it has been. I know a lot of your questions are about that specific program. Again, nothing that I just said is official. Nothing's happened yet. This is just what we're hearing and seeing and anticipating in DC, is that because there has been such a strong response to this specific program, there may in fact be another influx of funding towards it. With that, I want to start going through some of the questions. And we've gotten a lot of questions before this webinar even started. So I am just going to start with one to kick off the bat for Steve and Burl. So this is basically a question we've gotten from folks sending to us over and over the past week. We know a lot of you are hearing from your banks a lot of different reasons why you might not immediately have been able to apply, whether that is a load cap on applications, some technical issues with the banks maybe weren't set up in time for the influx of applications. So we hear you, and we know that there have been some issues. So I just wanted to present that. I know this is not news to Burl and Steve either, but for business owners who are hearing things like that from your bank, what is your best advice, and what's the next step?
Yes, so the reality is this is a huge program, $349 billion. We're still within the first calendar week of rolling it out. It's brand new. Now, when I say that, it's brand new to Congress. It's brand new to local leaders. It's brand new to us. It's brand new to Steve White. It's brand new to lenders. So we're all sort of learning this program as we go along. So when you look at a program that size rolled out in its first week, there are definitely going to be some minor technical glitches along the way. So having said that, I wanted to really stress, I really appreciate everyone's patience and persistence as we literally break new historical ground together. And just as you said, you encapsulated that very well. The issues have been wide ranging from lenders, getting set up in the system, making sure they were eligible, making sure they had access to a system we call E-Tran. E-Tran is simply the electronic platform that SBA uses to submit its 7A and 504 Community Advantage loan programs. And that is the same system that lenders are using to submit the PPP programs as well. In the past, lenders did this at a much slower and spread out rate, but as you can imagine, lenders have dedicated a large portion of their staffs to taking these applications and inputting them. So we've had to bring more people on board and had to train them through the process. And we are still doing that literally as we speak. Me and my team, we worked night and day last week through this weekend, and it looks like this is going to be another long night too, bringing lenders on board to do that. So having said that, with the high traffic volume that's come across lenders' desks, many lenders have conducted a sort of application triage, if you will. So they started with their existing customers first, and once they wade through that, then they're going to get into the ability to take non-customers. And it's nothing more than just their ability to sort of manage the application process because of the high number amount. So those of you who have reached out to your lenders and they weren't able to take you yet, I would encourage you to reach out to them again, have patience and be persistent with your request as they're able to move through the process, and as it's able to be more streamlined, both lenders and borrowers become more familiar with it. Like anything, it's new. Familiarization is going to breed efficiency and speed, and we'll be able to get caught up. So right now, everybody across the board is dealing with some backlog issues, but it's just nothing more than a matter of bringing on a brand new system that everyone's going to learn together. So definitely what you said is true. We are working through it. We've got processes in place. And as I speak, we're bringing more lenders on board, and they're getting increased access and familiarity. So please feel free to reach out to your local lender, the depository institution where you keep your business accounts, any federally regulated lender, and just let them know, hey, you'd like to apply for this program.
Thank you for that comprehensive response, Steve. We really appreciate the time going into this. We've gotten a few questions for both the EIDL and the PPP on timelines. So I know you just went into a little bit of at least the timeline of talking to your lender and what that might look like. But if you're if you've already gotten an application in, so again, for EIDL and PPP, we've got one person saying they applied for the EIDL 9 days ago and haven't heard anything. So if you, I know we talked a little bit about the timeline before, if you don't mind touching on that again, Burl, and then maybe again for the PPP, I think folks would appreciate it.
Sure. For the disaster EIDL, particularly for the emergency advance, 9 days ago, not having heard, I would recommend that they go back, take a look at that site, and if they have not applied through that site previously, that they go through the application process and complete that. One of the reasons is that there has been some changes in the requirements and the processing time frame that go along with the new site that may be able to be an advantage to go that way. And if we contact them in the meantime, then we can deal with that. But at least you have your application in at the most current level and the most current processing, and I would just recommend that. There is an email an email address that people can use for status, but we're seeing people being responded and funded even before they get responses from the email. So probably I would say the best would be just go ahead and reapply if you haven't applied through that Streamline Center. That's the COVID-19 relief address that I gave earlier.
Thanks, Burl. And for folks listening in, we will definitely be including those links and resources in our follow-up email from this webinar. So, we have a lot of questions about repeating URL addresses. Just know we will send all of that to you in a comprehensive list. Another question we have here, specific, I guess, to Wells Fargo. So we've got someone who's reached out to Wells Fargo, their main bank, for the PPP application, but heard they reached their max loan limit and won't be accepting additional applications. Do you know if the ceiling will be raised, and are banks considering applications from outsiders, people who don't have an existing banking relationship with them?
So great question. As the process moves through, you're going to find some fluxes and starts. Just historically, all lenders that are federally regulated are required to maintain what's called a loan loss reserve fund. Basically, for every dollar lent, depending upon the bank size and the liquidity nature of those loans, there's a dollar amount that the bank is required to maintain. Many of you historically, I'm sure you remember in class the Great Depression and the crash of '29 and so forth and so on. The fix for that was to make sure that banks no longer lent out all their capital, that they were able to make good on a certain amount of percentage of outstanding balances. So there would no longer be a quote unquote run on the bank and that sort of thing. That legislation has changed over time and taken on many different forms, and as funds are made available through each program, each particular lending program, whether it's federally guaranteed like the SBA's or not, but all of those programs have their requirements for maintaining a loan loss reserve fund. So Wells Fargo, due to the nature of its size and its ability to take on the applications, they of course reach their liquidity limit pretty quickly. That's going to change as time moves on and we move into the forgiveness amount, and SBA forgives certain portions of the PPP loans. Those banks that are up against the hard stop, so their liquidity limits, are going to be freed from that and then be able to get back in the game and that sort of thing. And I'm certain that the lenders at the national level have already contacted their loan authority regulators and let them know where they're at as far as their inability to continue lending past their liquidity ceiling. So that's some of that is just a matter of everyone taking a breath and realizing that there's a certain limit that banks are going to be held to. We're going to keep that standard to maintain a strong economy even through the situation. So if a lender's not able to take your specific application, not a worry. It's just a matter of finding another lender who can. And so that's why I'm going to ask everyone again for patience and persistence. Patience to recognize the process is not going to be fast and immediate, especially at first, and to know that throughout this process there's going to be some starts and some stops, and that's going to be with every lender, not just with Wells Fargo.
Thanks, Steve. I want to be sensitive to both Steve and Burl's time here, and we're just over the 30-minute mark. I'm going to throw in one last question that I hope is a quick answer, and for everyone else whose questions we weren't able to address, we'll make sure that we can work with Steve and Burl and their colleagues and get you some answers as soon as possible. So the last question we'll do today is, are we eligible if we're partially owned by a holding company based outside the U.S.? I imagine that this question is addressing both loan programs.
I would
Burl,
say
did you
for
want
the
to go
disaster,
first? Go ahead, Burl.
okay, sorry. For the disaster side, I would say make application and discuss it with your loan officer when that time comes. That's the best way to do it, because there's so many components to that question in terms of what we're looking at, that it really needs to be a direct conversation between the owner and the loan officer.
On the
And we do a
triple
lot
P
of that.
side,
sorry.
affiliation is a concern, but it's not a chief concern. So I would echo Burl, his sentiments exactly, and say, go ahead and apply. Let the system tell you that you're ineligible, and don't self-select.
Right.
Okay, thank you all for joining us today, and a special thanks to Burl and Stephen for your tireless work during this very tumultuous time. We at People for Bikes are extremely grateful and know that the bike industry is also extremely grateful for your work. We will be in touch with these resources soon, this afternoon, if not earlier. So please be on the lookout for those, and we will talk to you all again soon. Thanks, everyone.